And with that, we move on quickly on to our next session, which is a panel session. It is a panel discussion entitled Funding and Investment Opportunities, Investors Briefing to Startup. So for this, we will be joined by Shri Sanjeev Bishnoi of Bajaj Capital, Shri Akash Jindal. He will be the moderator of this session. And we also have one more speaker, which is Mr. Sahan Rai. He is from Earthmate Tech. I'll request all of them to please join us on stage. So it's a panel discussion, but we see three heavyweights on this stage. So starting with Mr. Bishnoi from Bajaj Capital. So Mr. Bishnoi, what are the inputs if a startup wishes to have capital in their kitty? What do they have to do?
Good afternoon, everyone. See, most of the startups which I've met in the last few years, even yesterday and today, I feel they just think that we being a startup, we are eligible for equity or we should raise equity. Most of them have advised them that right now you don't require equity and don't offload your percentage just for the heck of raising the funds. You have the capability and your financials also show that even if you raise a minimum amount of equity or minimum amount of debt, you have a runway. You raise it when you need the funds to grow, and at least something should be off the ground. Just merely at the concept stage or development stage won't give you a good valuation, or a serious investor or a long-term investor would be reluctant. And though the capital is there, abundance capital is there, I can assure you, for any good concept which is involving some kind of a USP, not only on the artificial intelligence or on the deep tech or on the drones or electronics, but even in the edtech sector, in the food and vegetable sector, exports, there are a lot of sectors where the capital is waiting to enter, but in a good, I reiterate, on a good concept, it's there. And maybe for 3 to 6 months, somebody is able to run on his own. After that, one should look for the private equity, and definitely, if the concept is good, the money would come in. That's it. Thank you.
Thank you, Mr. Bishnoi. So we have in this panel Mr. Sahan Rai from Earthmate Tech. I would like to, ask you the same question. So if a startup is looking for money, what is the golden rule? What is the mantra?
Thank you. So I resonate with some of the things Sanjeev said. So today there is a lot of capital available if you are a startup and in multiple sectors. So you would see there are high tech or deep tech sectors like even we are building satellites as startups today, as well as there are products which are traditional products or industries but done with the new consumer in mind. We have seen products for babies, products which are close to a mother, or products which are in sports and athleisure as well, which are new segments for the Indian consumer, but they also have access to capital and they have a tremendous consumer story as well. Also, like Sanjeev said, that you should be careful about the fund you raise straight up, be it, what I would add is, be it capital or be it debt. So I've been a part of startups for last 10 years now, and I've seen that cycle, which was I would say an e-commerce cycle, particularly B2C commerce, followed by B2B commerce and consumer cycle, and today we are in the tech, including fintech, where Earthmate is, I would say, a pioneer. So we've seen these cycles. Now, initially, when you are taking off ground, there would be some capital you need. So as much as possible, if you can bootstrap, particularly with your core team, and one is external capital, and also when you are building the core team, then where do you allocate capital? You cannot compromise on the quality of people that particularly the first 15-20 members, and there is a very, very strong correlation that I have seen how good a startup would actually scale up and accelerate. Depends on that. So some kind of startup you will some kind of capital you will need there, and it is okay, I would say, to dilute that first round of equity. But when you have the product ready and you deeply believe in it, then like Sanjeev said, for I would say scale 1 to maybe scale 3 or 4, can you actually monetize the product, take little bit of debt, and there are plenty financing options that is available now. As I mentioned, the first cycle, if it's the 2008 to 13 kind of a cycle where the VCs were all around, and you sort of needed that equity to be in the game, otherwise sort of it's like very difficult for you to either attract talent, and some of the ideas that were going, they were accelerating because that high funding was there. An example I would give in my last startup, actually Uran, which scaled up pretty fast. But one of the members of the founding team, he said that he went out for a 1-month trip to Europe, after his Flipkart stint, and he had food delivery in mind, and they had the product ready. When they came back after a month, they saw boards of Swiggy everywhere, right? So that was one cycle then, right? Because it was big money coming in, you dilute equity, you just hire 200 people and you have to accelerate. But today I think market is more rational. So an ideal cycle for me is to take whatever capital you need to get the first team and the first product on board, because you cannot and should not do things alone. But when it's the second or third cycle, the next 5 to 10, I would say next maybe 3 to 5 years, try to build up the product, finance it with the first set of consumers. Then if you take equity, it has to have a very strong story. Either you are going for product expansion, market expansion, you are building something really new for which you have to attract talent. So be clear about the model, because the second round of funding that you are going to take is also, put the action on you, because you are going to lose, whether you like it or not, significant amount of, freedom for what you can do. Because once you have an equity raise, whether it is 5 to 10 million, you sort of, some bit of your focus from building the product and the core business, it actually goes into like doing what your investors would prefer as well. So that
Coming
is my
back
initial
to you,
thoughts.
Mr. Vishnoi and Mr. Jindal, also both of you, I would like you to sort of be a part of this conversation. We are living in a different universe now. You have a Shark Tank. Next time you want to propose a new idea, a lot of youngsters want to go into Shark Tank, and the moment you hit a Shark Tank, you're a celebrity overnight. So in that kind of a universe, how does the traditional way of working things work? Does it work, first of all?
So, Ajay, you want to start with me?
Both of you.
Yeah. So, firstly, let me introduce myself. Gentlemen and ladies, my name is Akash Jindal. I am a media person. Many of you greeted me also. I appear on all the leading Indian channels, be it Aaj Tak, Republic, India TV, and of course, global channels, US and European channels. And I have a very easy task. I'm in the task of asking questions. That's the easiest thing to do. I mean, these two gentlemen definitely are much more talented who have to answer. So I'll definitely answer your question. But prior to that, I want to involve all the people. I see some of the seniors, some of the young and beautiful faces. If you can have answers for some of my questions, because that's what media always does. And that's a very easy job. I ask cabinet ministers, global business heads. Now, though it's about tech and tech startups, but what I think is, I dream of many startups. When I roam around in Connaught Place, where my office is, where his office is, so what I find is a burger company which originated in US and it's ruling the world. It has around 500 restaurants in India selling burgers.
No questions about that, sir. It's ruling India also.
Yeah, it's ruling India. So that's, and a pizza company again. Now, what I often talk to myself is that, like a burger or a pizza, now can there be a startup and can there be funds arranged for that startup? Wherein, in case Akash Jindal, that's my name, I come out with the startup, Akash Jindal Samosa, Akash Jindal Kachori. I see smile on some of the beautiful faces. Akash Jindal Bread Pakoda. And then can I have a combo like Akash Jindal Shikanji plus Samosa? Maybe when I discuss it with some youngsters, they had smiles on their faces. I mean, sorry to say, perhaps we have some psychological complex about that perhaps a burger, if it has originated from the Western world, it's a hep food. And my kachori and samosa are perhaps desi food. But I don't believe in that. I have too much of belief in my fast food. So what I want to know is, if I start such a startup, would I get funding?
Yes, sir.
Do I get funding? And then why is it so that in the past 15 glorious years of startup, because we have many unicorns, I have myself been interacting with them. I've been interacting with our Honorable Prime Minister, who is a action person, who believes in the growth of our nation. If yes, then why in the past 15 years we didn't have such a startup? And in the first place, and then what about funding of such startups?
Yeah.
So,
So
Mr.
I'll
Akash,
come back
let me
to you.
answer that.
Yeah, I'll come back to you, Mr.
I think
Jindal.
he has raised a very, very relevant point.
I think she's mentioned
Yes.
Sorry.
So, Mr. Bishnoi, before you respond to that, I also want to add another color to that pot. So, when we spoke about Shark Tank, and he raised a valid question, he said that you have a McDonald's, and then you have a lot of local brands who are now successfully selling burgers. So coming back to Bajaj Capital, I mean, we have seen a lot of innovation, and I'm sure all of you agree with me. They have come up with some fantastic products in the recent times. So you have a card wherein you spend and you pay only 1/3 in one go. You don't have to pay the whole amount. That's like music to my ears. For someone like me, that's amazing. So what is the real real thing behind all this, thought process and success?
I'll answer it in two parts. First is for the Mr. Akash, because that's the latest question. We have seen private equity coming in burgers. We have seen private equity coming in dosas. We have seen private equity coming in biryani. The fourth thing is samosa. Already Samosa Kingdom is raising the funds. We are raising the funds for Samosa Kingdom. You can check it. Another thing, Samosa King is there, and another is this company in the Bangalore, which has raised almost 8 to 10 crores. They are doing a 42 crores volume only on samosa. They said 25 varieties of samosas, 12 lakh rupees samosas per day. That's the figure. It's already, I'm just not getting its name. It's a Bangalore-based company. Yes, sir. Samosa Party, exactly. Thank you very much. Sorry?
Samosa Party and Samosa Singh, there are two companies. So Samosa Party was founded by ex-CFO of Pizza Hut India and another ex-Deloitte employee. So they both quit their jobs and they
Husband, wife.
Friends.
Okay, they're my friends. But so samosa is answered. Now it comes to the bread pagoda. See, Bittu Tikki Wala is also raised private equity. BTW. It's East Delhi based fast food. They have raised. We have. So see, what is happening? What Mr. Jindal has a perception or a hitch in mind, whether the Indian companies, they are already, but it's just that they haven't got that kind of recognition as yet. How many people really know about Bittu Tikki Wala, or how many really know about the dosa factory? Maybe very few. But yes, about Jubilant raising the funds, Burger King raising the funds, Pizza Hut, and so on and so forth. Everybody is there because that is coming very frequently in the newspapers, media, and everything. So it's just a matter of time when you will see that the Indian food products, they will always be raising the funds. Another thing is some of the established names like Haldiram's, Bikaner Wala, AFP products, Yellow Diamond, they are also raising the equity funds. There are certain websites which give you the complete information. Now coming to a question about the Shark Tank. It's a very good platform for various companies to raise funds. But personally, I feel it's not good because there the valuations have been beat down to a very large extent. If somebody is valuing his company as 100 crores, he has done his own homework. Nobody likes to beat down his own valuation. And another thing is, there is most of you must have seen the Shark Tank. See, it's my personal idea. I'm not voicing anything about my company. It's a personal thing. So maybe if somebody felt offended, I'm really sorry for it. But I say that's Shark Tank kind of a thing where there is so much of negotiation on the valuation and other things that done. I don't like it. I don't like belittling any promoter. See, he has put his heart and blood into it, sweat and blood into it, and bringing this concept up. फिर जाके वो कोई सुन के आके तुम्हारा concept अच्छा नहीं है. It's not like that. There are other ways of saying no, or a polite way of saying no, or maybe some other way. Platforms like this is very good because you are meeting a lot of people. You are meeting serious investors. You are able to discuss. You are not guided. What the promoter wants to say, he is putting his heart out. I have met several startups yesterday and today. I've seen they are able to speak their heart out. They're not guided. Whereas in most of these cases, I'm linked to assignments where the guys have those companies, they appeared on the Shark Tank. They say that they're guided. I'm saying an open truth. So I feel this kind of the platforms, they are really good. People should come there. You should also tell your friends, fraternity, that this kind of platform where you are able to put your heart out, you are able to negotiate, you are able to showcase your product in entirety is good.
Allow me 2 more minutes where I can involve the audience on
Yeah,
something which
and-
I want to learn from all these people.
And also, I'll request you, Mr. Jindal, to kindly steer the conversation. Let's ask the questions. Let's get the answers.
Why not? Why not? Why not?
Fantastic.
So now, my dear friends, just allow me to start the conversation. Now, when we talk I'll come to you. When we talk about startups, I expect startups to play a very, very important role in the economic growth of our country. That's what I was talking to Raj Sharma ji, that now the growth engine of my economy, Indian economy, which is going to be a 5 trillion economy and going to achieve many things, is going to be startups, whether tech or general startups. Today, the global economy is almost close to recession. Now, US economy, we have seen last year, 2 quarters, it had consecutive negative GDP growth. German economy, 2022, last quarter, again negative GDP growth, minus 0.4%. Whereas my economy, my Indian economy, are there any takers? How much are we growing at? Any of the young people? So it's a wonderful figure. We aim to grow at 8%, but still it's a bit lesser. I would love to grow at 8%. Any takers? Yeah, we are growing at 6%. And this is the target for this year. And at 6%, we are the fastest growing economy in the world. We have left behind the US, which had negative growth in last year's 2 quarters consecutively. Germany, the 4th biggest economy, we have left them behind. Last quarter of 2022, minus 0.4%. Then economies like UK, France, all are struggling with growth because of the Russia-Ukraine war and many other issues like US Bank, Europe banks, and many other issues. Then comes to smaller economies which are closer to us. Economy like Pakistan, where people are literally fighting, hitting, beating each other for 1 kg of atta, that's wheat flour. Or Sri Lanka, we all saw how people bathed in at that open swimming pool. So now, what about China? So very, very important. So very important. Thanks for pointing out. China, December of 2022, China had a lot of COVID, and there were very questions regarding China's growth. And as sir have very rightly asked, last year China for a particular quarter, they grew only by 0.4%. Now, of course, they have come out of COVID. They have lifted the restriction. They are growing. They are expected to grow by 4.5%, sir. But that would be an impact because earlier they were not growing. So the base impact would help them. Now, with all this growth, 2027, we expect it to be a 3rd largest economy. And there's another study, not by Akash Jindal or akashjindal.in. Of course, I'm a proud Indian, but a global agency which says we'll be a 10 trillion US dollar economy. My economy, your economy. Can anybody tell me what could be the year by which I'll be a 10 trillion US dollar? Not I, all of us.
Mr. Jindal, how much people are getting free food in India?
how much people are. I'll come to that, sir. I'll definitely come to how much people are getting free food and how I and you are proudly paying for it. There's nothing wrong in that. I'll first answer that. 2035 is the year when my economy, sir's economy, would be a 10 trillion US dollar economy. Now, to answer sir's question, how many people are getting free food? I think I'm a proud Indian if I'm paying taxes for those brothers and sisters of mine who are getting free food, because I have not become Pakistan, where people are hitting at each other for 1 kg of wheat flour. I have not become Sri Lanka, where people are out on the roads fighting for fuel and food. I'm staying in a city called New Delhi, where there are jostling crowds fighting to get into buses and metro to reach their offices. There are traffic jams. And I hail from a country which boasts of a huge vaccination campaign, which was unparalleled throughout the world. Now, of course, my population has crossed China, but Chinese, Pakistan, since I appear on global channels, they talk about how India vaccinated each and every person. So, sir, I am not embarrassed that free food is given to my brothers and sisters. I am quite happy that I am not a Pakistan. I am not. 80 crore people. Yeah, coming to the gap between rich and poor, firstly, I'm proud that I am able to pay taxes for my brothers. Now, you are talking about inclusive growth. I think inclusive growth is where all these gentlemen who are from startups are going to play a great role. Because right now, because of global issues, we are having 7.8% unemployment. And that's because of Russia-Ukraine war, previously Corona. And I think their startups have a very important role to play. When I talk about 10 trillion US dollar economy, I look beyond tech startups. I am looking for, as Sanjeev was pointing out, a samosa startup, a bread pakoda startup, a iron and steel startup, a car manufacturing startup, where we could give jobs to our people. And when we give jobs to our people, sir, then everybody would be earning 25,000, 40,000 rupees per month. Then there won't be any need for food, sir. Then they'll take that money, go to a restaurant, go to a dhaba, go to a ready and buy food with that. That's the sort of economy my organization akashjindal.in is looking. Whereas, yes, I have limited resources for infrastructure. I have a huge population, but do I use that huge population for generating growth? That's what people like Sanjeev Bishnoi, he's from my great friend Rajiv Bajaj's organization, and Rajiv call it demographic dividend. Or do I do something like Pakistan, where they borrow money, fund terrorism, and that's a demographic disaster. So to earn demographic dividends, I expect all of you to play a very, very vital and major role. And that brings me here, that how can startups be that vehicle on which my dear country, my proud country, can become a 10 trillion US dollar economy. And that's where I want Sanjeev and Sahan to speak.
Yeah, so I would take some of your question as well, and the point that Mr. Jindal and Mr. Vishnoi also made about growth. Now, yes, I agree that by 2035 probably will be a 10 trillion economy, and some things that Mr. Jindal said, I would say that yes, there is probably nothing wrong that people, a significant part of the people, as you have mentioned, are getting free food. But your point is also very, very correct that there is still massive inequality, and probably in some measures the inequality has increased if you take the first 1% and rest. But also, if you go to colleges today, I graduated from one of the IITs 15 years ago, and today if I go there, and we actually had a little bit of prejudice because a lot of the new IITs at that time was coming up. At that time when we were there were only 5. Today there are 23. But if I look at the talent today, because we are hiring from them for multiple roles. So I also agree to the point. I'm not a big fan of Shark Tank. I know some of them, but it's a commercial TV, right? It's a smaller problem that way, that a lot of the startups who probably would have done extremely well over a period of time, if you go to a platform like Shark Tank, when you on a commercial platform, and people there have to be people what the TV channels need them to be. You might beat down both your future potential and your own sort of confidence. Having said that, I see a lot of the people that I have met across these colleges, and there are multiple others, right? And some of them are not even by the time they are 10th or 11th. I see the next generation are becoming sharks, and sometimes I feel that when I am interacting with them, I am like in a shark tank, because the amount of not just information but the vision that they have, and from very very modest families. So our generation, and I think some of you also had seen, when we were growing up, our first hurdle was to get into a good college. And even if our parents had stable job, but it was to be a good college. Now I see people, and in a way the free food actually can help there as well. But today, if someone is below poverty line, but his family's basic needs are taken care of, the next generation, lot of them I have seen, by the time they are in 9th grade or 14, 15, 16-year-old, they have access to internet. It has negative benefits as well, but the positives are that they know, let's say, how to code. My nephew is 13 years old, and I saw him. I was on an interview for the tech team, and we were hiring people from one of the IITs for and one of the basic requirements was
allow me to interrupt you with this great thoughts.
Huh.
Yeah, there's
I will just finish
just,
the chain of thought. Otherwise, I will go ahead, go forget it. So what would happen is that, because we are creating a platform of, let's say, if not like equality in terms of money, but equality in terms of at least social needs, which comes to giving free food, etc. The next generation actually is having a platform. And globally, what would happen is, today if you see that Uber took 8 years to build the technology, Ola with all Indian engineers did it in 2 years. Amazon, there was only one company globally who scaled up e-commerce platform, and it took them like some 12 years. I think maybe from 1998 to, let's say, to 2010. Flipkart did it in 4 years. Between 2008 to 2012, all Indian engineers, lesser number of engineers, had a scalable platform. What would be the next stage is that how do we take this global? Because our growth, we cannot have the type of growth like one is the Middle East kind of a growth, which is the resource they have, and on that resource taking the national resource abroad and having growth, but a limited amount of people. And we cannot compare ourselves obviously to countries like Pakistan and Sri Lanka, but definitely China is our benchmark. Today they are 5 to 6 times larger than us, and we also have to appreciate today that they are able to build everything in tech, from military tech. If you see, they are already building Generation 6 fighter jets. We are actually, our Generation 3, Generation 3.5, and with due respect to DRDO and the personnel here, we are there, which is great, but we have not caught up. So one is that, can we catch up in technology across the board? Like obviously the samosa and Indian cuisine and Indian clothing story, taking it global in one, but in high tech, how can we catch up? Because in the end, we are importing today, I think $150 billion of oil, electronics of 100 billion, and I think gold and jewelry is the other import that we do. So $300-400 billion of import, and probably that will go into.
Allow me to interrupt and ask some more questions.
I will just finish in 1 minute. So our focus then needs to be in tech when it is startup, and if we catch up in tech, which I see will happen with this generation coming on the social platform in next 5 to 10 years. On tech, we catch up with China, and then we take a lot of it global. And startups, as they have mentioned, is going to enable us doing it.
Yeah. So now this brings me to another component. Till now, we have been discussing, and that's a very important component where I want a lot of thoughts from Sanjeev Bishnoi. Till now, we have been talking, how do startups raise money? Is it difficult for them to raise money, seeing the global economy is quite close to recession? Or is it difficult for them to raise money, since seeing there has been a failure rate also in startups? But also I wonder about a different thing. Where do startups invest? Now, what do I mean by that is, tomorrow if Akash Jindal Samosa or Akash Jindal Bread Pakoda, I am very happy that my friends are endorsing my idea, starts a startup. And with all my links and connections, I get 100 billion US dollars. So I'm not going to invest the entire thing in making samosas on day one. Perhaps the money has to be invested in a staggered manner. Some money has to be invested on day one, some after 2 months, some after 4 months, some after 6 months. And during that period, how does a startup do a brilliant treasury management so that it can make decent money? How can Akash Jindal Samosa make decent money out of managing that 100 million till it's actually deployed into manufacturing, into making more money out of it? Of course, it won't be perhaps investing into stocks which are too speculative, but would it be liquid funds, cash, some scheme by bank? And I think Sanjeev is the perfect person to answer on that. One is how startups can get investment. Now, this is how Akash Jindal Samosa or Akash Jindal Bread Pakoda can park its funds to make decent money, because we all know Fortune 500 companies make decent amounts of money by their treasury operations. And what about startups, Sanjeev?
Thanks, Akash, for giving this question to answer. See, first of all, as per the common notion, the startup funding is not only limited to the foreign funding. We have abundance of investments available domestically, be it through VC funds, be it through Indian investors, or be it through family offices. So earlier there was a notion that okay, the overseas funding is coming. India is not dependent for the startup funds on the overseas funding. We have got lots and lots of investors who are ready to come and invest into a good idea. Second aspect is either they are coming as a financial investor or a strategic investor. Both are different. So the financial investor looks, okay, I'm putting in the second round as a seed, or maybe at this, but how much involvement I have. On the strategic side, they will give you some kind of, milestones that you achieve this, I'll give this much of fund. Supposing if the investor is committing 1 crore, he'll say, okay, in 3 months, I'll give you 25 lakhs. In the next 3 months, I'll give you 25 lakhs. But these are the milestones you have to achieve, and you have to maintain these parameters. Actually, this is healthy because he is putting his skin into the game. You are putting your expertise into the game, and he is also helping you through a better financial management. Sometimes what happens, the money is lying only into the current account of the startup, so which is actually earning nothing. So the financial investor who has an expertise, he will tell you, okay, you put into some kind of a liquid fund where at least 4%, 5%, 6%, whatever the prevailing rate is, you are getting it. Moreover, sometimes you can leverage on that as well, or you can make an FD and leverage on it. So there are multiple ways. What happens? The biggest advantage with the startup person is that he is very tech savvy, but he may or may not be financially savvy. So when this investor is coming, he gives him that acumen as well. He also mentors him or her for the startup to grow. Now the thing is that is coming gradually. Everybody is becoming wiser how to make it grow jointly. So in the first year itself, after getting the investments, whatever form it is, CCPS form, directly into the company, through the provincial equivalent, quasi debt and whatever. So they always gives the milestone, which one the startup has to achieve, so that the next tranche is coming up. And before the last tranche gets dried up, there is the mutuality decided whether we should go for the next round of funding through the equity route or through the debt route. So it's a very good combination that you get a good investor into the company.
So it's very great, Sanjeev. You have mentioned a very nice one-liner that startups, they are good people who manage very good companies, but financially they have to be much more savvy. With that, I have to inform you, the beautiful lady standing on my right is pointing out that it's curtains for us, it's time. But now to end up, it was really beautiful being here, talking to all of you. And I, Akash Jindal, would expect with the great visionaries like Sahan and Sanjeev with me, and of course, many seniors sitting here, that the startups would be the vehicle which would make my dear country grow up to not only a 10 trillion US dollar economy, but the second biggest economy. That's another target by 2040. A visionary prime minister who believes in India, who believes in Indian growth, is working at so nice themes like Atmanirbhar Bharat, Make in India, and we have made so great unicorns. So I think it's all up to you. Rather, we look forward to all of you to have that India growth journey. You will be the preferred vehicle for us to reach there. Thank you very much, all of us. Thank you.
Thank you very much.
Thank you.
Well, it's been a enjoyable discussion. Thank you so much for making it a very, very topical and very interesting discussion. We would like to thank you all with the presentation of these mementos as a token of our appreciation and thanks. And with that, may I invite Ms. Alka to please join us on stage. On behalf of AICRA, we would like to thank you all for for initiating this dialogue and being with us here today. Our thanks to Mr. Sahan Ray. And a big thanks to Mr. Akash Jindal.
I rather thank all of you for this nice event.
And of course, if we see Akash Jindal Samosa anytime in the future,
Definitely.
remember we have a pack for a free shikanji.
Definitely. Yeah.